black box. The rapidly expanding world of blockchain technologies.
All right. Hey, everybody. This is Tucker Sutton. I'm the Chief Investment Officer and co-founder here at Black Box Digital Asset Management. I'm joined by my two partners, Noah Bortnick and Tristan Threet. We've got a very exciting guest for you guys today. We've got Pete Haynes. And we're gonna talk markets. We're gonna talk crypto. We're gonna talk investing. We're gonna talk it all for you guys. So we'll kick it off here. Gonna introduce Pete and let him talk about himself a little bit. So how you doing today, Pete?
Good. Excited to be here talking to you guys, and fun to get one of these conversations recorded because it's we seem to come up with some pretty good ideas every time we get together. At least now they're documented. But background is in private investment. Manufacturing is kind of my day-to-day focus. I have a business here in Kansas City, and then manage a portfolio of investments across many different markets for our family office. Everything from real estate to construction, a little bit of finance and things like that. So we kind of cover the gamut, and a mix of passive and active different investments. So that's kind of I grew up being put to bed by stories about the stock market and this crash or that. My dad's a avid trader and longtime investor, and my grandfather was definitely an aggressive trader and of stocks and an acquirer of stocks, and is a big part of his success over his lifetime, aside from running and building and selling businesses. And so that's kind of where I get the education that I've used to kind of build my repertoire in investing, and got involved with crypto just because it was something new and exciting. I was like 30 at the time, I think, when I guess 2013. Yeah, geez, so I was even a little younger than that. When the white paper came out, I remember my buddy calling me and telling me about it. He's like, dude, this is crazy. You've got to and he was writing a paper for I think it was his first year of law school or something like that. And so I was like, yeah, I don't get it. And me coming from a traditional value investing background, it challenged all the norms that I had grown up inside of and thought worked pretty well. And so I just kind of dismissed it because, you got to remember at the time it was still incredibly hard to acquire Bitcoin or otherwise, and it still kind of made no sense at the time. But it started to make more sense over time, and so I just started kind of playing around with it. But it really wasn't until the run up in 2017 that I got pulled into it, because I was like, okay, this is real. There's a lot of money flowing through these markets. And so I just started, digging into that and realizing, it's at the time, it was all retail money, which, if you look at it like a penny stock market or something like that, it's mostly retail money in there. And especially when everybody's left holding the bag. So I was skeptical, but I was like, well, I have to get some exposure. And so I just waited, everybody who watched that first run and didn't get in did the same thing. Yeah, he just waited till finally I saw, I was like, man, it's at 3,000. This could go to zero, and this show might be over. And then it started running back up. So that was kind of when I really started buying it. And then of course, when something you buy goes up, you just want to keep learning more about it. So, so that was really the beginning. 2018 was kind of the beginning of my journey in crypto. And I do love the founding principles of financial freedom and autonomy over our finances, and therefore the choices we make in life ultimately. So I think that there's definitely a fundamental aspect that hits home with me, and I think hits home with a lot of the people in the crypto who are passionate about crypto. It's fun to see like a bunch of green on your account when you open it in the morning and all that. But I think everybody kind of does feel like they're part of some type of evolution. You're kind of evolving money and the system of finance, and average people's access to financial tools and things like that. So it's exciting, and history's told us usually when something like this sticks around for as long as it has been, that it's probably here to stay. So that for me, yeah, that 2017 run kind of solidified it. Then run to 67 was like, all right, yeah, this is where I'm parking some long-term money. This isn't just a trade or a fad or something like that. That, yeah, it's exciting, and I love following it, but there's more to it than that. So and now we see real, meaningful institutional participation. So that gets me even more pumped. So that's really what I look forward to. I mean, regulatory clarity as well would be nice. Hopefully it's something that just treats things like commodities. But we can talk more about that later. So yeah, I mean, really the big thing that got me over the hump to like jump into the market was just that we'd seen that bump up from 3,000, and I'm not a chartist or a TA guy, but like I do follow patterns and trends, and when I saw that move, I was like, okay, there's some legs here, and especially in the with the central bank and then with the Fed at the time talking about tightening and all that, and still we rose through that. So that was pretty much, yeah, that was when I never looked back. So that's my story.
Nice. No, I think it's interesting. You point on a lot of aspects that I think attracted us all to the space, whether it be from the financial freedom, the transformation of the technology, and, generally speaking, that run up that we saw. How was there a moment in time where you went from kind of just purchasing a few of the assets to then, navigating some of the blockchain based applications and actually really getting your hands dirty with the space?
Yeah. I had started acquiring, of course, once I dove in, I started looking into, all of the projects, and that were, popular, and the ones that weren't as well. Polygon was one of the ones that I found early that I just was like, wow, okay, they're solving a lot of problems. And so I amassed this wallet, and it's not like I had a ton, but it was all going up every day, and I'm like, man, okay, what do I do with this? And of course DeFi presented itself, and so that's when I really started utilizing the ecosystem, was that, and also Zed Run. My buddies wanted to open some stables and get some horses, and so we went through that whole process, and that was like, really those two things. I mean, yeah, Zedrun was actually probably my first time really like moving crypto from the wallet I originally bought it in through all of the different wallets to get it to wrapped ether, so I could participate in this drop, and that I have not done much with NFTs since then. I have to say, but the DeFi side really interested me because it's stuff I've already bought. I don't plan on selling it. I gotta, I mean, and I always have to remember I'm like a very long term investor. So I'm looking, 5, 10, 15 years out. Like 5 years to hold the stock for me would be kind of, midterm. So I look at cryptos the same way. And so, yeah, I'm like, well, I'm not getting rid of this stuff. And I'm seeing these huge, I'm seeing Nexo at the time's like 20% for Polygon when they finally brought Polygon on. I'm like, of course, here's my Polygon. And of course, at the end of all that, I learned that, there's, we saw Celsius and all these other insolvencies where you're just like, man, okay, I need to, because I'd taken out a crypto loan on Nexo and gotten involved in staking and liquidity mining on Cake. And so, yeah, as I'm watching everything drop, I was just like, okay, I'm glad that with this long-term time horizon, also diversification and, the weighting of something in your portfolio, taking into consideration. And so luckily I wasn't overexposed. But still, it was just like, okay, I'm going to have to pay this loan off at some point. I mean, it's cheap, but it won't, I mean, it's going to add up over time. So then I got to go through the experience of unwinding a lot of that type of stuff that, I mean, I can only imagine the number of people out there that have over a dozen different wallets, with all these different DeFi projects or, it's, yeah, when you look back on it now, those were crazy times. I mean, what was it with the time with 76,000% yield or something like that. I mean, there was a ton of those that had these ridiculous yields, and it was like if you didn't get in and out, you're left holding the bag. But that's also one thing that I like about crypto too, is like, it does require everybody to educate themselves, and if you don't, you might lose your money. I mean, like, you've got to take ownership of this base of knowledge, or else it will get you. So and I mean, taxes, it's like, I think back to 2017 in that run, and I was skiing at the ski area, and there's a guy with a Coinbase shirt on. I think it was a Coinbase shirt, and somebody said, asked him, hey, what's going to happen with crypto, and it's in like the lunchroom area, and he was like, oh, I can't tell you that. All I can do is ask you to please pay your taxes, because like but I mean, so many people get caught off guard with these tax bills, and it's like, I mean, there's a lot to learn here, which is for the right type of people. That's why we like it, is you can just keep learning all, and it never stops coming. So and that was like the feeling in the bull market too, was just that, every day, if you didn't keep up with the latest project, you were falling behind. I think there's still some of that to be said, but I mean, when everybody goes into defense mode development, all the capital that is required for development kind of dries up. So it sounds like there's some interesting new projects out there, and of course, the ones that survive all this will be the ones you want to place your bets on going forward too. So.
Absolutely. And maybe a good segue to one of the, institutions we thought that would be surviving and, being able to consolidate a lot of market share is going through a bit of trouble right now in FTX.
Yeah. It's fascinating. I mean, I kept wondering, all right, the question was, after that rash of insolvencies, it's like, are there any more, and who's it going to be? And, we went almost long enough to where I was just kind of, my gut was telling me, I was like, hey, that might be it, Yeah. But of course, I mean, we're in a quantitative tightening environment, so that's hard on all risk assets, and it doesn't matter which crypto you're talking about, they're all considered risk assets still. So I mean, that. Maybe there's something to the fact that like the loudest narrative is the next one to fall. Like, Luna was the loudest one in the room, and they were making, I mean, the $10 billion buying promise, it wasn't at 10 billion, and all this stuff. And they were the first, the canary in the coal mine, maybe. So maybe there is something to that. I mean, Sam Bankman-Fried's getting, all this press. I mean, he's like the only name you've been hearing in crypto for the past like 5-6 months. I mean, Michael Saylor, totally, like, I mean, I haven't heard anything from him really. Pomp closed his podcast down. I mean, O'Leary's been pretty quiet. Yeah, so it's like, he's the name you've been hearing. And so, I don't know, there's something there, but it's surprising. But at the same time, when you have a totally unregulated space like this, I mean, all this does really is it pushes, because it's too big to fail at this point, it just pushes regulators to get their job done and give people some clarity, so that, businesses can kind of have, I mean, it's kind of like the cannabis business in the sense that, cannabis operators, the actual, brick and mortar operators, oftentimes struggle with not being able to get, a full suite of banking services. They might be able to do deposit, nothing. So it's just like, there's still this wall up between, traditional finance, CeFi, and, and crypto, the crypto market as a whole. So I don't know, there's that too. But
yeah, no, and
of course, and we are seeing in the news, sorry to interrupt, but we are seeing, I mean, we've JP Morgan's using, or was it JP Morgan's using Matic, and you've got Instagram adopting it. So there are some institutional moves. Fidelity is another one. So it's not like we're there's still ways to go, but we are starting to see CFI or TradFi or whatever you want to call it, and crypto kind of merging.
Definitely. No, it's been fun to watch the evolution of the infrastructure.
Mm-hmm.
But yeah, do you wanna talk a little bit about the market sector?
Yeah, I was gonna ask you, Pete. I mean, obviously, I don't know if you've been watching it all today, but with this Alameda FTX insolvency kind of unfolding, we've had some wild price action today, but that kind of brings me to my point. Like, this whole year has been pretty rough for not only risk asset investors but crypto investors specifically. So my question to you is, like, how have you handled that, and has it given you pause at all? I mean, obviously you talked about going through the 2017, 2018 run, and obviously you've seen that drawdown, but has this given you any pause or any inclination that we might not come back, or that the institutions are just getting into shorted, or how have you kind of not only like interpreted that, but how have you played that personally?
Yeah. Well, I mean, and the short answer to how I've played it in crypto has just been, I've been holding on to what I had already acquired, and I've been, buying, whenever we kind of start getting down. I mean, for a while it was like anytime near the 21,000, I'll buy a little bit of Bitcoin. So yeah, I mean, like, as a buy and hold guy, that's right now, it's kind of like, I love it when the price goes down, because then I finally get to buy again. But no, more broadly, it definitely, I mean, there were moments where you're like, okay, so is this when the whole system falls apart, or is it going to grow through this? And I think that, it's kind of shown that it can. I mean, there's not a lot that can displace crypto at this point. So, I mean, I have a pretty positive long-term outlook, but, what I've been following, I mean, is really just kind of at this point, listening to the Fed, just listening to everything they're saying, because, we know that, when the Fed gets tight, that, markets suffer. I mean, there's no other kind of outcome. So when you look at cryptos, I mean, I was definitely not buying, back in the first half of the year. Yeah, it's just, I mean, all you can do in those times is just tough it out, and you're looking for that kind of change in momentum. And as we've talked about a lot, there's probably still some more to go down. I mean, that's not great news, but at the same time, I think that the closer we get to bottom, the closer we get to, kind of back to a normalcy, at least, where there are healthy projects that are, making developments in the space. So, yeah, I mean, in terms of how, you want to know how I interpreted, if you could repeat that, I forgot how I interpreted what now.
Yeah, just how you thought about the, I guess 3/4 of price action we've seen in kind of in context with TradFi markets and the Fed, like, and that kind of leads me to, like, where do you see this going, and where do you see the Fed speak going, and CPI print this week? What are your thoughts on all that?
Okay, yeah, and so I mean, that was, and I definitely, I mean, the Fed has been really clear with what they're going to do. And I'm of the belief that while it's nice that we can kind of sort of maybe see a light at the end of the tunnel, that they're already, I mean, if you just listen to every single word Jay Powell says, it's we're going to increase our terminal rate beyond what was originally expected, and things like that, where it's like, okay, so yeah, like, it's going over 5, like I mean, right now we're pricing in, yesterday I checked, like, CME's pricing in like a 66% chance of a 50 bip hike. There are signs that inflation's coming down, but the CPI print, number one, it's lag data. Number two, of course, they're going to, for core, they'll strip out food and fuel, but fuel's still high. I mean, it kind of took a breather, but food is outrageously expensive no matter where you go. And so, I mean, Yeah, that's kind of, I mean, we've got the war in Ukraine and different pressures there that are out of their control. So, what they want to make sure is just that they're slowing demand. But I mean, for all the talk about inventories and everything else, I kind of am yeah, retail sales might be slowing a little bit, but in general, the American consumer is pretty damn healthy still. And so, as long as that's the case, I think, I think that inflation is going to be sticky high, and just because it comes in like a couple bips below the last read, I mean, that's not that meaningful when you're talking about how high we are historically. So that's one thing where I think the bond market is kind of telling us that, like, they're holding tight. Like, I mean, it's just been, pretty much chopped since the last big run up a couple weeks back in yields. But there's definitely, I mean, there's so many different, we've got elections. So, I mean, Republicans take the House, and that's going to be good for stocks, but we've got a CPI print that goes to, that's going to tell us what the Fed's going to do tomorrow. So it's like, I mean, what's going to happen in the next, before year end, is kind of tough to say. But I mean, I do think that for 23, I mean, we started hiking rates in March, and generally speaking, you see effects of that for 12 to 18 months after, if not longer. And so what those further ripple effects are, I mean, there's a lot of smarter people than me out there predicting those, but I think that what the general consensus seems to be is that, yeah, I mean, there's no way we don't see a real recessionary downturn where you actually see demand and job destruction, sometime second half of 23. But even the first half of 23, it's kind of hard to tell because, I mean, for the time being, earnings were kind of mixed this season. I mean, that was kind of a surprise pre-earnings season. There were a lot of people saying, "Oh, the banks are gonna take a beating," and there's all these, kind of doomsday predictions, and it kind of came in like middle of the road. And I think that generally speaking, that's what markets do. And if you back out, zoom way out on crypto, especially, unless the world falls apart, we're all going to wake up tomorrow and go back to work, and so will the markets. And so I think that crypto has kind of passed that test. That I mean, it's been in those kind of end scenario type situations where it didn't pan out in the worst case, and I mean, it leaves plenty of room and plenty of support for another rally that's maybe based on a little more fundamental value, which I think is going to be healthy for the crypto market. I mean, we've already trimmed out all of the bullshit projects out there that we all, I mean, that everybody loves to bet on when things are going well. But
that's something I was going to ask you about with with the Fed was, do you see the labor market as kind of the thorn in their side? And because it's kind of my opinion that they need a recession in order to bring inflation down, because this labor market will not budge,
right.
And they need people to stop spending the way they are. So kind of that's kind of what at least I've been watching is, until we see unemployment start to tick up, materially, I don't think that they really have the room for a pause that people, are kind of desperate for.
Right. No, absolutely. No. And labor is what they're looking at. That's the only, I mean, you hit it on the head. I mean, until you hit people in the pocketbook, they're not going to stop spending money. And if they don't stop spending money, well, then, prices remain elevated. So, you're totally right. And, no, I think that from my perspective in manufacturing and, investing in private businesses, there's not a single person right now who I know that would not hire a good person if they showed up with an application ready to go. I mean, if somebody walked into my office for any of the positions we have open with an application that was, everything was accurate, right? Because we have a few kind of tests on there. You got to know how to use a ruler and measuring tape, things like that. But yeah, if somebody came in and just had that application filled out and said, I just want to work, I would put them to work. And I don't know a single other manufacturer that's not saying the same thing. We are starting, I mean, from my side of things on the labor market, I mean, maybe we are starting to see a little bit of softness in demand, but I think that we're really just kind of seeing cyclical turnover. Like, I mean, demand itself is still pretty high. So yeah, I mean, we've got to have the people, and again, I mean, you just take the common sense approach of looking for help wanted signs. I mean, you still see them all around, and if you get on job websites, there's no shortage of them. So, I mean, that's the thing. I think that the Fed's looking. They have no other point that they can really make decisions on, you know, because at the end of the day, like, killing demand is what they have to do. But hoping that that jobs number starts looking worse, you know, that, you know, joblessness starts to increase. I see that as one of the last knock-on effects of this round of tightening. You know, I mean, like, there's such a shortage that you know, I feel like, you know, other aspects of the economy will hurt first, and that, you know, I mean, companies are going to have to contract a lot across the board in order to eliminate the need that we have for good workers right now. So yeah, from that very perspective alone, any narrative that I hear about, oh, this could be the bottom or a Fed pivot, is just hot air. And I mean, you saw it in July. Like, that rally was just like, I mean, yeah, it was a great rally. I'm sure a lot of people made good money in it, but like, at the same time, it was totally irrational. There was no substance behind it. You know, I mean, yeah, they'd done a couple of jumbo rate hikes, but like, yeah, I mean, things don't react that fast. So the market was like trying to, and that really is my opinion on what the Fed's been trying to do this fall, is slap the market's wrist for getting so hot-handed in June, July, and, you know, early August, because they didn't give any positive forward-looking or any dovish forward-looking direction or statement in any of their comments, you know, whether it was at the FOMC meeting or after, or Jackson Hole, whatever, you know. So that's just where you get this this false narrative of, oh, we're at the bottom. And anytime I've heard that, I've just started shorting the market, because I know that the next stop is down, you know. So that's been an easy play, and that's been really how I've been investing on a short-term basis this year, is just shorting the S&P, gone long treasury yields, and those have worked out pretty well. And you know, try to really, it's just, okay, try to figure out how to make some cash in this kind of crazy, choppy, volatile market, so that when there are good buying opportunities, like, you know, in the crypto space as an example, I mean, geez, this huge hit to Bitcoin today. Yeah, the closer it gets to like 15, I'm a buyer. So yeah, you know, kind of just trying to make lemons out of lemonade on you know, all of the volatility and you know, these huge downward swings in the market, and you know, make a little bit of cash on the side and redisperse it into my more long-term stuff. That, you know, really crypto, I still intend, I mean, I'm only probably about 5% allocated to crypto, and that's across, like, you know, my DeFi stuff. That's you know, my whole portfolio. So I've, like, you know, in my opinion, I've, you know, at least another 5 to 10% that I'd like to add. But you know, I mean, it was like, it's hard to buy something when it's at the top. So like, I kind of stopped buying Bitcoin in the 40s when it was on its way up, and then I've been kind of buying it below 30 and near 20. You know, just kind of nibbling here and there. But I still haven't been able to make a you know, substantial move, just because it doesn't seem like we're, you know, close to the bottom yet. So yeah, I mean, and the Fed's not helping that. The Fed's also not saying that they're going to stop. I mean, okay, so maybe they go down to 25 bips a quarter through 23. Well, they're still tightening their balance sheet. Japan is all of a sudden just not buying treasuries anymore, and also accelerating the speed at which they sell them.
Mm-hmm.
And so, you know, I mean, as far as a pure yield play goes, it kind of looks to me like there's still some room to run. A lot of people are saying, oh, could this be a top in yields, or could this be the beginning of the last leg up in yields? but just those two factors alone, you create all that liquidity in the market, and there's only one way yields can go. So that could alone be something that breaks markets in 23 and pushes us into a real recession. And I think that's kind of where my eyes are set now, is like, what's going to break the market? There's a handful of different things that they are a little more complicated and less in vogue right now. But I mean, the whole treasury market just seems pretty scary. So and dollar strength and what that's doing to emerging markets. Although I've been seeing some experts out there talking about, emerging markets is where you want to be right now. So maybe there's something to pay attention to there. I just haven't had the time to dig into that. But yeah,
So, Pete, kind of as you're looking at, some of the traditional markets, whether it be bonds, equities, just compare gold and precious metals, how do you look at those, some of the pros and cons of like investing into the crypto market compared to, I know you mentioned, you have around like 5% of your portfolio into the crypto space, maybe looking to add, another 10%, but, how are you looking at those more traditional markets compared to the crypto markets?
Yeah, gold is interesting. I've never been much of a gold bug. I own a little physical silver. Just bought it because it was like, it had just tanked from like $52 and it was down to like 14 or 15. I was like, thought it'd be cool to buy a couple 100-ounce bars of silver. And so for a minute there, I was actually sitting on a nice little gain. But no, I think that crypto definitely has proven that people want to use it. Individuals want to use crypto more than they want to use gold. There's not a very simple way to turn gold into purchasing something. You could buy the GLD, and I think it has a little dividend, and maybe use that cash to buy things. But that's not the concept that we're talking about. And so, there's a utility to the fact that there's like a utility to Bitcoin the way there used to be a utility to gold. If you had gold coins, that was Tinder. So that's just, I think that's a sign long term that crypto is kind of a new, or Bitcoin at least is a new gold. The gold bugs swear up and down that when the dollar loses strength, gold's going to go through the roof. We'll just have to see. I'm going to have a little bit of gold in my portfolio just as a hedge, but I might just buy like long dated calls on NUG-T or the GLD or something like that, just because at the end of the day, gold doesn't have very much manufacturing utility either. At least silver, palladium, platinum, those have some real, lithium, of course, have real industrial application. And they're, rare. Palladium and platinum especially. But so, I think that the metals market, is largely, I don't want to say it's like, it's changed, but I don't think that it's gonna have quite, generally speaking, when you see a downturn like this, gold goes nuts. So, there's a reason for that. And I won't profess to be smart enough to know exactly why, but there's definitely a reason. So back to, I think that, gold could be a place where you could make a quick, 3-4x trade, just when the dollar does lose strength. I think there could be a pop in gold, but long term, I think that there's a lot of money that, especially in the VC world, that they are using crypto as a store of value. So we all know that volatility has to decrease for Bitcoin or any crypto or any competition to cash to become a standard. But if you look at it then back, at least with my Bitcoin, I can go put it in. I mean, and now, Nexo is not paying 7% on Bitcoin, but, you can still earn some yield on that. So it's kind of like, I mean, it's, if you do the side-by-side comparison, Bitcoin's looking more and more attractive. It's looking more and more like gold, just in the way that, utility of its own utility is being developed every day still. I mean, we're getting more diverse ways to use our crypto, and so you've got products like that for gold, but and it is entrenched in our financial system. I'm racking my brain to find like bull cases for gold long term. And the farther out I look, the less useful and the less valuable it seems. So,
do you think we'll see like kind of a decoupling of the crypto assets? I mean, Bitcoin or Ethereum from those traditional markets? I mean, the utility cases, I think, for those of us who are really in the crypto space, it is like seeing like maybe like a tech bet in the 90s, or just starting to see those real use cases. But as we start to look at those utilities, the utility of the various assets, the various DeFi protocols, I mean, do you foresee any sort of decoupling from, regardless of its, the precious metals market or the equities market? Do you see, decoupling in its future from those markets?
I'm always looking for like what that catalyst could be. There's all kinds of different scenarios that you could throw out there that might be that catalyst, but I think that there definitely will come a day when that occurs. The hard part about making predictions like that is that, we don't have a lot of regulatory clarity right now. So that's a big one. Is what role is this allowed to play in our lives in the future? It is like looking at, it's different. I'm trying to compare it to Apple in the 90s or something like that, but it's different in the sense that, it's not this product, it's not a iPhone. It's, you're looking at Matic and you're thinking, all right, adoption, or who's using this now? How many of them are there and how much money are they moving through it? And they're building a product too. I mean, it's not something that you can hold in your hand. So that's why it's like, it's hard for a lot of people still to kind of fully grasp that, like, and we still have this question of securities versus commodities and all that. So how do you value something that's supposed to be a token, not like a company with earnings? And, you get into all that type of, discussion then. But yeah, I think that moving forward, I think that there's definitely a possibility for decoupling. I think that economic turmoil offers one of those opportunities. So not that we want to see any level of chaos farther or greater than what we've already seen introduced into the markets. But, we've talked about a couple scenarios geopolitically, like with escalation in the Ukraine or something like that. Or China invades Taiwan or something where, that just drags down global markets and then kicks off another downward spiral. And, if you're looking right now at like China and Russia are dealing in they're dealing in yuan now, right? That was but yeah. So, you've got these macro factors that could really introduce some chaos into our financial markets, and that's when when crypto has its opportunity to shine, especially like with all the trouble the Fed's been having controlling global currencies through our own monetary policy. Essentially, that gives a lot of people pause to say, why? These guys aren't even, well, they're elected officials, but they're all kind of career academic political types. They're not actually running the economic machine, so to speak. And so what do they know? And so a lot of people get upset with that and think, yeah, I want true financial freedom, that I hold my keys. I have my own, destiny in my pocket. Like nobody can take it from me. So, I mean, I think that there's when things get to their lowest and get, hopefully they don't get that bad, but at the same time, that does offer an opportunity for a decoupling event. Or the other one is just the broad adoption. Once you finally get broad adoption from financial institutions, central banks, and sovereign wealth funds, of course, which is O'Leary's favorite one to data point to talk about, is there's trillions and trillions overseas in these sovereign wealth funds that won't touch crypto until the U.S. gives it the regulatory green light. And so, yeah, I mean, when you look at that, it is kind of a threat to the dollar, I mean, so we've got, and that's the other thing I was just reading earlier today is CBDCs, there are multiple CBDCs in development around the world. So what kind of threat is that to the crypto system we know and love? Back to the parallel with cannabis in the United States, it's like the operators within these states that have established themselves don't really, they're hesitant towards federal legalization because they're making money as it is. They don't want anybody to mess it up or, change the way they have to do business. And so that's where it's like, yeah, I mean, you want the regulatory clarity, but you just what happens if it's not the news that you want to hear, so
right. I think that's an interesting point. It's like I think there's a lot of people within the crypto communities, they don't want to see any regulation, but I do think in order for regulation or in order for mass adoption and of cryptocurrency, you almost have to see some sort of regulatory clarity, especially when you're talking about highly regulated institutional and investors, whether you could say an RIA or just other types of institutions. They need some sort of clarity, which would probably open up the world of cryptocurrency masses and blockchain as well. You kind of mentioned a little bit of very small sort of trends that you're kind of following. Is there anything in particular that you're excited to see? I know that obviously cryptocurrency and blockchain, it's a ton of fun during the bull markets because we see all sorts of wealth being created, but a lot of that happens during the bear markets. Is there any trends that you're following, whether it be in Web3 or layer ones, layer twos, anything in particular?
One thing that does get me excited is the whole carbon credit thing. I'd love to say that I understand the carbon market, but I don't. But there's this, IMPT.io. They just launched and they're in like a pre-sale phase right now. But just the general idea that like people can tokenize their carbon footprint and, that can actually direct funds to renewable energy projects or ecosystem restoration and things like that. That's the magic of crypto, is that you can build a framework that is its purpose, is to collect those funds and disperse them to the parties that need them, and that way you get the whole circle of because the idea of a company that creates a lot of CO2 emissions being able to buy their way out of it obviously doesn't sound that good, but if it's going into carbon offset projects, then great, that's awesome. And the fact that people can have access to that market who maybe they don't own a business that really fundamentally benefits from access to these types of credits, but they can still trade them, own them, they can tokenize their own personal carbon footprint and things like that. So I think that there's definitely, and that's just one example of the way that crypto can provide like this three-dimensionality to a space, that creates that level of flexibility, governance, that is required in order to execute this grand type of idea. So yeah, and DAOs in general get me super excited, just because the whole principle of a DAO is as a business owner, I would love it each of our portfolio businesses ran itself, governed itself the way a DAO does or is supposed to, just the idea that people come together and find a reason that they all agree their work is worth their time, and worth the money they're being paid. And I think that's pretty cool. And I think that it definitely, as far as innovation goes, I mean, that's when humanity hits these bumps in the road. Innovation is kind of what helps evolve us out of that phase to the next one. And so that's back to what attracts me to crypto is I think that anybody who thinks that way, that's where they're spending their time. They're either spending their time there or in like biotech, spaces like that are AI, that are like really, on the cutting edge versus, building things like buildings and stuff, roads and highways isn't nearly as sexy anymore because nobody's trying to figure out how to do it better, and so that's,
it's actually really funny that you mentioned all three of those. And Tucker and Tristan can attest to my obsession over, especially DAOs, but the AI has been the latest one, that I have been just like, gosh, AI is the coolest thing to hit the world. But, even those carbon credits, I think what's just so cool about it, I don't think I've talked to you about any three of those. So that's kind of neat. But just like the potential on the blockchain, it's almost, I don't want to say unlimited, but there's limits that I don't think we've come anywhere close to seeing, like the full potential of, the power of the blockchain. And it's just fascinating to see as it grows, like what we can do, what's already here, and then what's being built. It's just, crypto's the biggest rabbit hole and a half. Yeah. And it's absolutely, just fascinating what's being built, what we can potentially monetize and have real world utility. So
right. And the democratization of finance thing got oversold during the last bull run, but it's not an overstatement. It's exactly what it sounds like. And I think that I'm all about personal freedom and autonomy, and not just over every aspect of your life. And so, what better way to grant that to people, than give them the power that, on their phone, iPad, whatever, they can generate, whether it's passive income or, and just like, the United States has lagged in STEM education, for a long time. When I was a kid, that was like what everybody was saying was, we were like 20th in the world or something. And crypto is one of those things that's really drawn a lot of people into computer science. And, I think that, hey, they might be drawn in by the dollar signs and think I'm going to get rich in crypto. Well, great. Yeah, it's a free market. That's you have the right to do that. In the process, those people will probably create something that people need, and so it's just a matter of right now we're stuck in this gray area where you have the baby boomer generation, or they'll always be stuck in TradFi. Their whole life is stuck in TradFi, and but up to folks who are like mid 50s today. There's plenty of runway for this huge number of people that are not the core group right now to start utilizing these tools and then actually having some meaningful impact on their life, in a standard amount of time you might expect for some other financial product. So, but back to the utility, there's got to be an actual need. That's why I love Polygon, is that, it's like the perfect complement to what really is the standard operating system for DeFi, and that's, then you have Bitcoin, which is that's the store value. So, to me, I am kind of like, one thing that is a little scary, and this is me kind of switching gears a little, because what I like is that you have like this disbursement of job duties. For you have Bitcoin's job duty as store value, and ETH's duty is to basically just be the programmable platform that everybody can build the next generation of products on. And I like that it's simple, because that I think people can understand, which is kind of the next big hurdle for crypto, is for normal people to get that. But no, I say normal people who aren't obsessed with this stuff. Maybe we're the weirdos, they're the normal people. But yeah, so I mean, I think that that transition will just take time. People will just have to start to get used to these things and have easy on ramps. I mean, the easier these on ramps get. Now, for me, figuring out how to use Nexa wasn't too difficult. Figuring out Cake was kind of difficult. I mean, that's like as deep as I wanted to go. After I did Cake, I was like, yeah, man, if I did this on like all these other ones, that would take a lot of time. I gotta just find like the couple projects that I want to focus on. But yeah, so I just think that in general, the market needs a little bit, people need a little bit more time to kind of warm up to it. But I think that in these lows is when people really build confidence, like, yeah, okay, don't, classic, don't buy high and sell low. Don't buy at the top and, and ride it all the way down. But if you did, don't sell it now. Geez, you're shooting yourself in the foot again. But yeah, so I guess I sort of answered your question. But opportunities, yeah, the stuff that gets me excited is the stuff that we don't know yet. And even in this market, here's this impt.io, and they're launching a carbon offset initiative. That's super cool. I mean, you can't just start a company and take it public and do or while you're raising money, which is essentially what they did. They set up the framework, and now they're doing their pre-sale and they're raising money for this project that could positively benefit, impact the world. So and I think there's, of course, in every market there's bad actors, but honestly, a lot of the stuff that's gone on there were I forget which one of the projects that just went insolvent. They couldn't find the founders for a while. Did they ever find those guys?
3 Arrows.
3 Arrows. Yeah.
3 Arrows.
Have those guys turned up yet?
No.
They have
Still
not.
can't find Suzu?
Yeah, can't find Suzu.
And, I mean, there's a lot of garbage out there, and say what you want about Silk Road and stuff like that, but like at the end of the day, the bad actors, and with no safety nets and nowhere to hide, that's one other thing that I love about this market is it efficiently kind of seeks out and destroys the scams. I mean, yeah, people will lose money in the process, but I mean, on Wall Street, scams can go on for years, and nobody's the wiser. So, and except for the regulators and the actors themselves. So, yeah, that's another thing that I love about this market, and one reason why institutional adoption should be coming, is that it's all on a public ledger. There's no dark pool or anything like that. Yeah, I mean, it's I have always thought that was what institutions would like about crypto, but obviously, when you have competing fintech popping up all over the place, I can also see, if I'm a banker, a traditional banker, yeah, I mean, that's competition. I'm going to try to control that at the very least. So, but yeah, I think that, the family offices are still largely on the sideline. I think that the sovereign wealth funds, obviously, we know are, but like just talking about like what we'll call them Western family offices, like European and American family offices, like I still get this feeling that it's kind of like, a lot of maybe the family members that work in the office or they're key people who get paid very well, have a lot of disposable income. Like a lot of these people own crypto, but it's in their private accounts. They're not, a fund manager isn't necessarily, recommending, hey, we should get in the Grayscale Bitcoin Trust. Well, I mean, geez, if you're recommending that today, yeah, they probably look at you like you have 5 hedges. Like, geez, that thing's, I haven't looked at the price, but I could pull it up and I'm sure it probably would be pretty ugly. But, so it's like, I don't think anybody wants to take the chance yet, but there's nothing regulatory that's keeping the family offices from going in more heavily. But and that's from my own very narrow exposure to that space here, in Kansas City. I don't know what it's like on the coast. I'm sure people on the West Coast that are much more, tech heavy, they may have greater exposures, but I think that like the Midwestern family office type is the one that you want to win over. When you win them over, then it's they're all starting to come to the light. But yeah, so I mean, I'm not seeing it yet. I think there's so many different reasons to this should be in a family office type investment portfolio. I mean, it's an appreciating asset that you can earn a yield on at the same time. And you can do that with stocks and things like that. But very few stocks that have a high yield offer such enormous potential of appreciation. Even if you just took what Ethereum, where we are today and its previous all-time high, I mean, sitting and saying, I mean, if you looked at a stock and assuming that it wasn't totally, defunct, let's say this is a blue chip stock like a GE that's just been gotten, hammered over the past, 5-6 years because things weren't working and they're, hemorrhaging money or whatever. But that GE yields like 2% annually, or 2.5% or something like that. So it's like, I mean, first of all, you need to have a turnaround story. Well, the nice thing with like say ETH is that Polygon just you're still seeing growth in the user base. Like Polygon just had their 6 millionth wallet opening or something like that. And so, yeah, they're at an all-time high for wallets using the Polygon network. So, I mean, that happened in a bear market. And so there's certain indicators here that you can look at and say that, like if I'm a family office guy, I would still recommend, like, with idle cash, at least use 1% of idle cash and something like what Black Box would offer, which is just a simple way to drop ETH into a node and just earn your yield, and then having that ability, that flexibility to say, okay, yeah, we need to draw that back out, and using that as a tool to just to churn your liquidity so that it's not never sitting idle. That's the beauty of it, is that you can move this stuff any hour of the day. I mean, so you can. That I don't think people realize how easily you can turn things back to cash, and that's where I see it being very useful for. I mean, if you're a multi-billion-dollar or billion-dollar family office, or even a $500 million, still there's you've got investments rolling over all the time. You probably have a large stock portfolio that kicks off dividends, and so that's where you say, okay, well, over time we should just have X percent. This is our normal level of cash that we keep. Let's keep X percent of this over here, and if that works, well, okay, we can slowly over time increase our exposure, because, oh, by the way, when the market turns, we're going to be looking at triple, quadruple, I mean, you name it. I mean, it could be many multiples of, more valuable in a short period of time. So it's like, to me, it's kind of a no-brainer, but and I'm doing that in my own capacity, with you guys. So yeah, it's like, well, I have this stuff and I plan on keeping this level of exposure. So why would I not be utilizing every tool at my disposal? And if I have to give up a couple points just to make it so that it's that flexible and easy, then I will do that. Cause I mean, it's one of many different assets that I'm watching. So, that's kind of my position there, but, there's that. And yeah, back to this, tech bet in the 90s. It's like, you're not only are you earning some yield on cash that was going to be sitting there anyways, I'm talking about, ETH staking specifically, but I mean, here we are, we're comparing ETH to the operating system that they're essentially going to build, all this future tech on. So yeah, I mean, why wouldn't I go ahead and allocate some to that if I know that in, really a period of time that's well within my horizon, I will have earned back that value in yield. So I don't know. That's my own philosophy, and I think that the larger family offices are probably just still hesitant because it's like, the family members are like, oh well, yeah, I own some of that, and, I've got a Coinbase account, and maybe the more savvy ones have a ledger or something that they keep their stuff on. But yeah, so I mean, I think that you have so many arguments for, at least if you just want to look at ETH and specifically, so many arguments for just holding it as it's a slightly risky, it's a risk on investment, but you're buying it in a downturn, and you're not, this isn't going to be a core position for anybody in that space anytime soon, but building a large long-term position, especially if it's going to have this yield component for the foreseeable future. I don't see why I wouldn't just keep buying opportunistically and throwing all that in the kitty to stake. So, yeah.
Yeah, that's kind of our philosophy, and we're trying to get as much feedback as possible to figure out, like you said, what's that last transition to get a lot of people over the hump from just holding it in your personal portfolios into actually formalizing it, whether that be the security, flexibility, and a lot of different things that we're trying to tackle. But we noticed though here too, we're kind of nearing up on an hour here. And so we don't want to take up too much of your time, but we always love talking. So I'm sure we'll get another one of these episodes on the book soon.
For sure.
But yeah, I guess is there any questions that you had for us, maybe, or open it up, or anything you wanted to hear, or something else that's on your mind before we cut off?
No, I always enjoy these talks, and I always enjoy that you guys are as passionate about it as you are. I mean, that's why I'm working with you guys. Is it's you're the ones who live and breathe this stuff, and I only pay attention as much as I can. So it's one thing that's been impressive is just watching you guys make your inroads with the back end players of this marketplace. And it's one of those things that it's like, if you can buy it in your Coinbase account, why would you pay somebody to do it? Oh, well, that's not just what you're doing with you guys. I mean, you're getting access to other tools, but also you have three smart people that are digging in and staying as far ahead of the curve as they can. So that's why I always, if I'm going to do something, I usually call you guys and ask first. And I think you've got some other clients like that too, that, because I mean, at the end of the day, you guys, this is what you do. And so I think that's a good sending off, is just that you guys just, I think, keep digging, keep finding where the needs are, because that's kind of how you guys think, is like, all right, well, what can we provide that's going to be of value to people? And that's always going to be changing too, because this market's nowhere near done. So
nope, constantly evolving, but that's why it's super interesting and good to have frequent conversations with other people digging around and looking from different perspectives. So but yeah, thanks again for your time today, Pete, and we'll look forward to chatting again here soon.
Absolutely. Thank you guys. Have a good one.
All right. Thanks, Pete.
Thank you, Pete. See ya.
The rapidly expanding world of blockchain digitalization.